Hello traders and Market Club members everywhere. Adam Hewison here, broadcasting from the digital studios of Market Club. It's the 18th of December. We've had a huge rally in the market, and the question is, has the market made a U-turn? And I think it's somewhat premature to jump into the bull camp right now. We've talked about the markets being very, very thin. What we're looking at on the screen right now is a chart of the Dow Jones Industrial Index. And you can see we've had a big move up here. It's a 60-minute chart, something we don't normally look at, but I want to share this with you because it illustrates a pretty good point that I'm trying to make here. So we're going to look at this in terms of the retracement. We had a big move down. You can see right here we had a very large move down, measuring from this high, the all-time high for the Dow, almost 18,000, to the recent low, which is 17,072. We've come back up, and we have come back up 61 right here, 61.8%, which is a classic Fibonacci retracement program. Now the key level from here is it going to continue going higher, or is it going to sort of trade around and eventually roll over to the downside? That's going to be the big key. So I'm not going to spend a lot of time discussing this because we need to see more data. And of course Friday is tomorrow, and where we close on Friday. So let's see how that plays out. Let's go on to our next market. Pretty much the same picture in the S&P 500. This again is a 60-minute chart, which is something we don't normally look at, but I want to share this with you today. And then is put the Fibonacci on, click here, you see a little yellow box here on the left-hand side. Draw from the highs, the highest high you can find without going too far back, and then draw this, and you can see we've just exceeded the 61.8%. Now that happens sometimes, but I would doubt seriously we're going to see this market go much higher than we are right now without regrouping. We've had a huge rally here, almost over a 3% rally on just one word, patient. That's the word that the Fed used in its meeting yesterday, and that was enough to get the markets all excited. I think it's a little too thin to trade, and I think it's going to be a little volatile. That's what we said at the beginning of the month with our post. December can be a dangerous month for traders, and it's proven to be just that. It's very, very volatile and thin trading. Over on the NASDAQ, and the NASDAQ has come back a little further. If we measure from the highs, I'm going to measure from this high here. I'm going to measure from this high right here down, and you can see we're just in that 61.8% retracement level. Again, this is an area where the market should find resistance. Not much is going on in crude oil. You can see it's pretty much boxed out in terms of the market itself. You can see from the highs here around this level to the lows, that's kind of like where the market's sort of trading right now. And I think it's going to close lower for the week unless there's a monumental rally here on Friday. It looks like the market's probably going to close flat or lower for the week. And again, you may want to just take a quick look at where the RSI is. This is on the 60-minute chart. Again, it's below, so it doesn't look like it's going to get a lot of upside in this market right at the moment. On the dollar index, this is again the 60-minute chart we're looking at. You can see we're very close to these previous highs that caused the market to have somewhat of a pullback. That's going to be a very psychological area for this market to get over right here. And we're getting close to that level here, the 89 to 90 level, which is definitely going to be a challenging period for the dollar. We may have to regroup more if we're going to see this market go higher, but right now we could be aware of this thing. But we are in a bull trend, but the one thing you have on the 60 minutes, a little bit of a divergence, which means you made new highs and new highs here, but it didn't make a new high on the RSI. Something to be very careful about. Looking at gold, this is the recent high right up here, right around over the 1230, 1240 area. Going to hit a high there, down to the lows. And we can see this market going down to the 1180 level, which is what we wanted to do because we think that's going to be an excellent, excellent place to buy. And the reason I said that is because this is going to be form the right shoulder of a base, and we want to see the market turn around from there. So pay close attention to gold. Maybe not today, maybe sometime after the holidays, but that's what we want to be looking at. Somewhere down this area, the 1180 area, with some signals that we get from our trade triangles, we want to be a buyer of gold, but not at the moment. Hey, this is Adam Hewison. We've covered a lot of markets. I couldn't really find any stocks I was in love with right now, but we'll see what happens tomorrow at the end of the week. We'll see how things are closing up then. See if they can continue the rally in the equity markets. I'm somewhat doubtful. So Adam Hewison for Market Club. I'll see you tomorrow.